Hello everyone, sunny weather finally after 2 weeks of heavy rain every single day. I hope everyone is doing well. And I am finally starting to believe that being fully invested at all times is the easiest and the best way to invest. This topic comes up quite often. The question is whether it is better to be fully invested at all times or whether you should try to time the market, sell before a market crash comes, and then buy back when the market is lower. I invest in both the stock market and the property market in Australia. Historically, I always try to take advantage of market timing. I cashed out my managed fund in February last year, and I was really happy to see that the unit price of my investment actually went down after the crash in March, and I sold it before the crash. But this year I realized that I could have made more money if I had stayed invested and did not cash out my managed fund at all. Similarly, I sold one of my apartments in August last year. I was quite happy. I made a pretty good amount of profit, and the banks were predicting property prices to drop 20% or 30% over the next couple of years. But this year I found out that property prices actually start to go up again. Houses are going up through the roof and apartments have started to go up as well. And today I looked at the historical chart of the S&P 500 index in America, and guess what? Everything is up and up. We are now way higher compared to the index value before the coronavirus pandemic. And this week, I see a lot of people on YouTube saying, oh, the market crash is getting worse, we need to run. But when I look at this S&P 500 index chart, I don't see any crash at all. What market crash? It's still a lot higher than before. So why do people try to time the market? Maybe it's greed, maybe they think they are smarter than the average investor. Or maybe they get itchy and they want to have something to do. You see, the problem with trying to sell and buy again is that you need to sell at the right time, but also you need to buy at the right time. It is very hard to know when is the right time. When the stock market is dropping, every single day you see the price getting lower and lower. So you will be afraid to buy because the next day it will be lower. And then when it starts to go up, you are still not too sure if it will continue to go up the next day, right? So you don't buy until it has gone up for a few days. And by that time, you may have missed the boat. By the time you buy the stocks again, the price may be higher compared to the price that you sold your stocks at. As seen in this article, between 1996 and 2015, missing the best 40 days in the stock market in America takes your return to negative level if you had invested this in the S&P 500 index. 6 of the 10 best days, in other words, it's like the 6 best days for the market during that period, were actually within 2 weeks of the 10 worst days. So the best days tend to happen very shortly after the worst days. So trying to sell and buy the stocks again is extremely difficult. The market tends to flip very quickly. Now, if you miss just some of the best days, the impact on your long-term investment return is actually very substantial because you miss a large gain in the early days of your long-term investment journey. Because of the compounding effect of investment returns, if you start with a lower investment amount, you end up with a substantially lower, exponentially lower investment at the end of your investing journey. You cannot really afford to miss those days, those early days where huge market gains actually take place. Have you heard of this investor by the name of Kevin O'Leary? He said last year that you can actually get $1 million by just saving and investing $100 a week. So you can turn $100 a week every week into $1 million over a period of, let's say, 50 years. That means on the flip side, if you actually miss out on $100 a week of investment return, you end up missing out on $1 million after 50 years of investing journey. Now, that's if you miss out $100 every week. If you actually miss out $1,000 at the start, the impact is even greater, because missing out a big amount at the start means the compounding effect will be bigger compared to if you miss out $100 every week over 50 years, because you have more time for the effect of compounding to work on your initial loss. So to repeat, the real problem of trying to time the market is that the market tends to jump up sharply after it bottoms out, and you do not know where is the bottom. So if, let's say, we talk about house prices in Sydney, so we switch from stocks to property. So house prices were sort of dropping last year, but this year, since let's say January, February, March, everybody is looking to get into housing, freestanding houses in particular, and it's very difficult to buy a house. So you'll find out if you see a house advertised for $1 million, it will probably end up selling for $1.3 million, because there's so much demand and there's such a lack of supply. If you want to get into the market now, it may not be too late, but you will miss out on a very large amount of potential gain over a long investment period of up to 50 years. Because you start off with a smaller house, and over 50 years, the gap in the value of a small house and a big house will be exponentially bigger compared to the gap today. Now, as a young person with around 50 years of remaining life expectancy, I'm starting to think that maybe I am better off to be fully invested at all times. Because with 50 years remaining in my life, I can afford to actually recover any losses, and I can let time actually do exponential work to grow my investment over the long term. I will still have my emergency funds, so I will want to have around 6 months of my living expenses and all of my mortgage repayments, including my investment mortgages. But apart from these emergency funds, I would be happy to fully invest the rest of my funds. I will try to stop trying to time the market. I know it sounds a bit funny, trying to stop trying to time the market, because it is actually difficult to stop trying. But I will try to stop trying to time the market. Thank you for listening, guys, and until next time.